The American stock market has been on an unprecedented upward trajectory. Never in its history has it experienced such prolonged growth. It seems to defy the odds, with the economy flourishing for so long that some are beginning to wonder if this could continue forever. Washington appears confident, encouraging investors not to worry. But when Washington assures us not to fret, it's time to raise our eyebrows. I find myself filled with concern when it comes to investments, especially in the current state of global markets. A global investment strategy. Selling stocks, holding cash. I've made the bold decision to sell almost all my stocks, not just in America, but across the globe. There are only two places where I continue to hold investments: China and Uzbekistan. Why these two? China's stock market has been in a depressed state, unlike most global markets, which are soaring at or near all-time highs. This makes China an intriguing opportunity. Meanwhile, Uzbekistan, a former Soviet republic ravaged by Russian control, is now emerging from the shadows, offering the potential for exciting financial opportunities. Outside of these two regions, I remain deeply worried about the global financial landscape. The American stock market streak of growth, without significant hiccups, has reached new records, a cause for great anxiety. I've amassed a large sum of cash, most of which is in US dollars. You might ask, why keep my assets in dollars? Especially when the US has the dubious honor of being the largest debtor nation in history, with its financial fundamentals worsening by the day. The paradox of holding US dollars. The reason I hold US dollars is rooted in global perception. When economic turmoil hits, people tend to flock to what they perceive as a safe haven. Many mistakenly believe that the US dollar is that safe haven. While I don't share this belief, I expect that others will, which should cause the dollar to rise in value. When this happens, I hope I'll be savvy enough to sell before the bubble bursts. But the burning question remains: where should I park my money when I eventually sell my US dollars? Truth be told, I don't have an answer yet. It's a dilemma that weighs heavily on me. China. A complex but promising opportunity. Many have asked why I maintain optimism about China, especially considering its stock market's underperformance in recent times. There's been plenty of speculation that President Xi Jinping isn't a fan of business, casting doubt on the country's future economic prospects. But despite these concerns, I still see China as one of the few nations on the rise. Historically, China has been a global power several times, only to collapse and rise again. I believe it's on the upward trajectory once more, though I could be wrong. China's stock market is depressed, which might not seem appealing to everyone, but I view it as a shield of sorts, offering some level of protection. Most global stock markets are at or near all-time highs, including those in the US and Japan. Japan's stock market had been down for 35 years before recently making new highs. I sold my Japanese shares, probably too soon, but I don't regret my decision. With most global markets riding high, China stands out as an underperforming option with potential. The nature of uncertainty. Let me make one thing clear. I am not entirely confident in my investments. Every time I invest, I'm riddled with worry, fearful of making yet another mistake. Investments are never a sure thing. If they were, life as an investor would be easy. But it's not. I am constantly questioning whether my decisions are the right ones, particularly when it comes to China. However, it's undeniable that the US and Japanese markets are currently at all-time highs. Meanwhile, China's market remains at lower levels, which gives me some comfort in believing that there is still room for growth. Whether that will translate into profits for me remains to be seen. The US debt crisis. A looming concern, One of the most significant risks in today's financial world is the exorbitant level of debt, especially in the United States. The U.S. has been borrowing at unprecedented levels, relying on its so-called exorbitant privilege, the ability to borrow with high demand for its debt. However, this privilege has been stretched to its limits. The deficits are out of control, and the fiscal situation is unsustainable by any reasonable standard. The big question is, will it remain sustainable despite the warning signs? Personally, I don't believe in the notion of a safe haven. Investments are inherently risky, and no place is truly immune to financial crises. My advice to investors is simple. Only put your money into what you genuinely understand. If you can't find Uzbekistan on a map, don't invest there. Stick to what you know, and you'll be far better off. Diversifying beyond stocks. Commodities as a hedge. Though I may not be heavily invested in global stock markets right now, I do hold other types of assets, particularly commodities. While gold is currently at an all-time high, silver is down 40% from its peak, which makes it a much more attractive investment in my eyes. Gold is too high to buy right now, but silver offers a more reasonable entry point. Beyond precious metals, I believe there's potential in other commodities like cotton, wheat, and oil. Commodities are tangible assets that hold intrinsic value. In today's volatile world, I would much rather hold commodities than stocks in many countries. The calm before the storm. Most financial markets around the world are booming, and in my experience, when everyone is feeling confident, it's usually a time for caution. Uzbekistan, for example, was devastated by years of Soviet rule, but now it's starting to rebuild. It's one of the few places that I'm optimistic about because it's emerging from a depressed state. However, I stand by my advice. Do not invest in places you don't fully understand. America has enjoyed its longest period of growth since the financial crisis of 2008 to 2009. The world, in turn, has reaped the benefits of that growth. But we are long overdue for a market correction. In fact, I expect the next downturn to be the worst of my lifetime. The reason? Debt. Not just in the US, but globally, countries like India are now carrying significant levels of debt, a cause for concern. Preparing for a market collapse. I'm holding on to a lot of cash in preparation for the collapse that I believe is imminent. The current bull market, which began in 2009, is the longest in American history. It's lasted far longer than anyone could have expected. When the collapse comes, and it will, I believe it will be devastating. Perhaps it's already here, or maybe it's just around the corner. Either way, I'm not buying stocks at the moment, and I continue to sit on my cash reserves. When a market collapse occurs, it's typical for everything to go down. Stocks, commodities, and even precious metals like gold and silver. However, silver and other commodities often hit a bottom first and start to recover before stocks do. I own both silver and gold, but I'm not buying more just yet. I'm waiting for a better opportunity with my cash in hand, ready to make a move when the time is right. As I'd focus on. Navigating a world of uncertainty. The global financial landscape is fraught with uncertainty. The US dollar may not be the safe haven people believe it to be, but perception is reality. And I hold dollars because I know that when turmoil strikes, others will flock to it. However, when the time comes, I will sell and reallocate my assets elsewhere, perhaps into silver or agriculture. I've sold most of my stocks around the world and now hold on to cash, waiting for the next big collapse, which I expect to be the worst in my lifetime. While I may not have all the answers, one thing is clear. We're living in unprecedented times, and caution is more important than ever. Please subscribe to our YouTube channel for more informative videos.